Hello, 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 community. Happy Thursday, everyone. Welcome to another community life event. As always, looking forward to these events as they give us the platform and serve as a purpose to bring awareness to the crypto industry as a whole, bring awareness to our ecosystem, and also serves as a platform for us to have a dialogue and have a communication line for us. We do these weekly events 3 times a week on different platforms, and that's vital because not everyone is on YouTube, for example, or not everyone is on Telegram or has a Twitter account. So we want to reach as many people as possible. In this crypto space, it's all about education because, like every new technology, every new industry, the main driver into the industry is always through education. So that's why we stress highly on doing the education, because we always believe that an informed, an educated, and inspired community is a powerful community. And the more we stay informed and educated and inspired, the better for every one of us. So with that said, once more, welcome to this community live stream on this beautiful Thursday. Happy Thursday to all of you. I hope your week has been great so far. As far as our daily events that we have, congratulations on day 52. It's amazing. We're moving forward gracefully. And after this live stream, of course, or not after, actually during it, at the end, we will be doing our daily Twitter community challenge, as we always do. So stay tuned for that at the end as well. With that said, as always, you know the drill. I always like to come, acknowledge you, welcome you, see who is here, and go through that briefly, and then turn back to today's session, as we will go through sessions as we always do, and we have something beautiful lined up. I know you see the title gave it away. It's Bullrun ecosystem, liquid, sustainable, and efficient. These are terms that are freely thrown around, but today we're really going to look at them in more details. And the point here is to highlight the importance of having a liquid, sustainable, and efficient ecosystem and platform, especially for the long term. And we're going to look at very interesting topics today, and I hope you will be able to have a takeaway from it, a positive takeaway from it today. With that said, let me come to you, community. Let me check on with you who is here in attendance and who made it. For those who are able to make it, welcome. It's a pleasure always having you here. I'm always very excited, always very thrilled having you all here and having these sessions with you on a weekly basis. We have my great brother Demo here as well. Hello, community. Hello, my brother Steve. Salute to you for leading the way in showing us how we can use this technology efficiently. I'm happy to be part of this so early. It's a pleasure having you in the ecosystem, in the community. As everybody knows that has been around in the community, great brother Demo is one of the veterans in the community, been around from day one. And it's always a pleasure seeing you around. Thank you for your presence, your consistency. It's always a pleasure seeing you around, my great brother. And you're absolutely right. Of course, it's such a great. It's great to be part of such an amazing community. And today's session will really highlight even more and give us that sense of assurance and like it will give us that enlightenment that we need to really appreciate what we have compared to the industry standard, or what we have currently in the industry, and even beyond that, if we look at the large market as a whole. Not other than my great brother Theo. Greetings, my great brother Steve, dearest great mama, Queen Mama Wino, and the entire Bullrun family. I pray that you and yours are doing fantastic. I'm so excited to get this session started. Let's go. It's always a pleasure seeing you here, great brother Theo. Thank you for your energy, your consistency, just your presence within the community. It means a lot to all of us. You are very much appreciated as well. We have Queen Val here as well. Hello, BRL family. Hello, Mr. Steve. Happy Thursday to all of us. Always excited to these weekly for these weekly sessions. Can't wait to hear what Mr. Steve has for us today. It's a pleasure having you here as well, Queen Val. You're a bright star in the community as well. We are happy to have you here. Thank you for your contributions, your efforts. It's a pleasure having you here. None other than the Queen herself. Greetings, community. Hope everyone is doing great and is in high spirits. Hello, Steve. Looking forward to another educational and informational live stream. Thanks for all you do to enlighten us. The pleasure is ours. Thank you as well for being such a great example, great leader for us all, and a great mother to us all. Thank you always for showing up. Thank you for your support. Thank you for your energy, commitment, and we're all very grateful having you with us in the community as well. We have the links to the Bullrun Telegram and the Bullrun website for those that are new within that are with us right now that are new. Feel free to follow us on Twitter, join us on our Telegram groups, and visit our website that you can get more information about. Thank you for sharing this, Queen Val. And then we have Queen Sally here as well. Happy Thursday, Mother Queen, Mr. Steve, and the entire family. Always anxious to be inspired, informed, and educated. Thank you. The pleasure is ours. Always nice seeing you in the community, Queen Sally. Thank you also for your presence, your energy, your consistency. It means a lot to us, and we are very excited having you in the community as well. None other than Queen Gulliver as well. Welcome. Nice seeing you today as well, Queen Gulliver. Hello, family. Today is the day. Let's enjoy our listening and make big. Yes, it's always a pleasure, Queen Gulliver, seeing you around. Thank you also for your efforts, your consistency, all that you do for the community. You're very much appreciated. None other than Queen Patricia. It's a pleasure always seeing you around, Queen Patricia. Good evening, family. Good evening, Steve. Thank you again for your commitment. Stay blessed and protected always. Thank you for your kind words. We can give it back to you as well. Hope you and yours are well. It's always a pleasure having you in the community. You are very much appreciated. Queen Nancy says, good evening, Steve. Hello, Bullrunners. I'm looking forward to today's session. Thanks, Steve, for your effortless hard work. You are greatly appreciated. You are also very much appreciated, Queen Nancy. Thank you for your efforts, your contributions, your consistency, and your presence, your positive energy. You're very much appreciated as well. I see Queen Val here added Killer Whale website and Telegram as well. So for those that are new, that are not aware of the website yet or want to get more information, feel free to join our Telegram groups or read up on the websites as well. Hello, Bullrun family. We are doing great. What an amazing project with dedicated members. Kina, it's a pleasure seeing you here as well. Thank you for your presence. It's always a pleasure having you around. None other than great brother Crypto Riser. A beautiful day to you all, Bullrun family. I am truly thankful for Steve and all his masterclasses educating the community in many ways. It's humble coming from you, my brother Crypto Riser, because your beautiful banners are gracing our beautiful Twitter pages, and it looks amazing, so it's always a pleasure to see so much efforts coming from the community, the contributions, the consistency, the hard work that coming from you all. Thank you all for all your efforts that you're putting in. It's really amazing. And thank you also, my brother Crypto Riser, for all the efforts you put in and all these beautiful banners that you put out. And that goes for my brother Thembi and Queen Val as well, for these beautiful banners that you put out. It's really amazing. Queen Kosi, always a pleasure having you around in the community and seeing you here as well. Thank you for taking your time to be with us today. Greetings, Mama Wino, Brother Steve, and the entire Bullrun family. Hoping everyone is well. Looking forward to an educational, inspirational session. We are being enlightened every time. Thank you so much for your kind words. It's always a pleasure having you in the community as well. And the third and final token is the survivor one. You see the website is there and the Telegram groups. Thank you so much, Queen Val, for sharing this with us. This is great for those that are new in the ecosystem and that are still not aware of our website or our Telegram groups. Please feel free to join the community. We are happy to having you joining us in this journey, in this crypto journey. We have Queen Martha here as well. Good evening, Bullrun family, Mr. Steve and Queen Mother Wino. I'm looking forward to this session. Let's go. It's a pleasure seeing you here, Queen Martha, and seeing you in Zoom, seeing you on all the groups, on Telegram, on Twitter. It's a pleasure. Thank you for your consistency, your commitment, your efforts that you put in. You're very much appreciated. It's a pleasure seeing you here and having you here as well. My brother Abdullah is here as well. Warm greetings to you all. Warm greetings back to you, my brother Abdullah. It's a pleasure having you here. Thank you for taking your time to be here with us. And this is impressive. This is very this is amazing to see Crypto Family here. We go way back with Crypto Family. Way back. I'm talking years. And it's a pleasure seeing you. And I want to thank you, Crypto Family, for that beautiful video you just made. It's a beautiful, detailed review. I always appreciate your calmness, your insight, your research that you do, and very informative videos that you put out there. We feel privileged having you in the community, and it's an honor for us. Thank you for your efforts that you put in. That's a beautiful video you put out there. It's a beautiful review. Community, let's show some love to this brother of ours, and let's ensure that we subscribe to his channel. Let's ensure that we follow him on Twitter as well, and let's show him the love that he deserves. Let's comment, tweet, like the videos, and do everything possible to promote and encourage him as well for the efforts that he puts in, not just for our ecosystem that he did today, but for the crypto space as a whole, in doing detailed reviews and really being a very solid human being that is trustworthy and very reliable. So thank you very much again, Crypto Family. He says, what's up, Steve and Bullrun family? Beautiful community I'm seeing. It's a pleasure having you in the community, and thank you so much for being part of this journey with us. It's a pleasure. Hello, family, Crypto Family, welcome. Absolutely, very welcome to the community, and greetings to you all, family. Greetings back to you all, Queen or King Bentley. Nice having you in the community as well. Thank you, Demo. Much love. Crypto Family says the love is being shared around. And finally here, Queen Val says, greetings to our great Queen Mother. Your presence is always a motivation to us. The queens are well presented in this crypto space. Women are the future. Beautifully said. Very beautifully said, Queen Val. Thank you very much for these closing remarks. And with this said, that was a long welcoming and introduction. So let's get to today's topic. We have a lot to cover. It's going to be a very informative session, hopefully to us all. And please bear with me as I'm sharing the screen. Let me share another screen with you so that we can kickstart this today. Okay, as always, we need to look at the market as a whole just to have an idea. I'm sure we are all glued to CoinMarketCap or other data sources that we get our informations from, tracking everything. So this is nothing new to you all. We are all looking at the same things. The market is up over 1% right now, and the market cap, this is interesting, it's at 2.55 trillion. Remember, all-time high back in November 2021 was at 3 trillion. So it's just mind-boggling how we're just so close from the all-time high of the last bull cycle, which was the largest bull cycle yet. However, we haven't even crossed through, we haven't even gone through the Bitcoin halving yet. And the most, the biggest catalyst will be, of course, the interest rate cuts. And when the Feds really flood in the liquidity through the central banks, that's when the real bull run is going to get started. Meaning that, like the saying always goes, like a rising tide that's when the rising tide will really raise all boats. So just merely being in the crypto space alone will boost everyone that is in this industry. So this is great for us. Another thing I just want to highlight is the greed indicator, the fear and greed index. As we know, this is a very emotional industry that is not just crypto, financial market in general. It's led by fear and greed, and this is what dictates the markets. Whenever it's high on greed, that means it reflects the market. We see how it's really progressive. We are very close to all-time highs. Both Bitcoin, Ethereum, and other cryptocurrencies as well are approaching the all-time highs. We're seeing massive volumes. We see massive gains, even in stable coins. It's a great indicator. Tether just surpassed 1 billion in market cap. And keep in mind, with the stable coins, the market caps actually reflect the liquidity 1-to-1. So these are massive things, and we're going to get into more details down the road as we are progressing, going through this session today. But these are the two things I just wanted to highlight. We're in the middle of at the beginning of a great bull cycle that will be unmatched. Even after this, it will be, there won't be another one like this. So community, I always want us to understand this, that this is once in a lifetime opportunity. And let's look at this as a wealth generating event, because let's be honest, what we are here in the crypto space to do, there are two sides of the story, and we're going to look at both sides today. One side says they're here for the technology, okay? And we'll pick a side today. And the other side says, they just call it how it is. We're here for the money, period. We just want to make money and then get out, you know? So let's look at both sides, and let's just pick our choice, make our choices, and see which sides we're on. Are we gearing towards the technology, or are we just focused on price go up? Let's find that out together, community. And as always, you know, we always have to set the tone, set the stage. And the way we want to set that stage today is that let's understand one thing. We find ourselves at a crossroad right now. And this crossroad represents the blockchain technology and the cryptocurrencies. And this blockchain technology, keep in mind, it's the new digital economy. It's a emerging market. And at the same time, it's the fastest growing market we've ever experienced in this space. So this is why once the floodgates open and liquidity really starts to be flooded into the markets, into the economy, the place where this liquidity is going to come to is cryptocurrency right now. We hit a road bump with the ETFs, and we'll look at that in shortly as well, because now with the ETFs coming in, we hit a road bump, especially for Bitcoin, because now majority of the liquidity that would otherwise come on the blockchain is now being intercepted and is going directly to the ETFs. And we'll go through that shortly. This session should make a lot of sense to us because we need to understand three things. The first thing is that, first of all, we are in a new digital, the blockchain technology is a new digital economy. It's an emerging market, meaning there's a lot of room for growth. We are just at the very beginning. And secondly, it is the fastest growing economy. And we will look at all of this as we progress. And knowing that these are the three items that we're facing right now, this is very important for us that we make the best out of this and that we look for longevity, not for a quick fix. Okay. So with that said, besides the cutting edge technology, the emerging market, the new digital economy, and the fastest growing industry, that is what awaits us at that crossroad. And at the same time, at that crossroad, another thing that we are facing and have to deal with, or have been dealing with for decades and centuries, is our fiat system. The monetary system is old. It's been tried, it's been tested. However, it's doomed to fail, like every other currency that has failed before it. So another thing we're looking at, and just briefly, is that we are plagued with inflation, with a currency that is actually losing its purchasing power, that is debt driven. And the only way to run this economy or to reignite it is always to raise the debt ceiling and to print money. And what that does, of course, it's a two-edged sword, because in one side, it kickstarts the bull cycle, but at the same time, it brings in inflation. And as it brings in inflation within the shortest period, it needs to be stopped. This is all part of the 4-year cycle. And these are things we need to really understand. This is how the 4-year cycles work, and they keep repeating themselves. So after you trigger a debt-driven market by flooding money into the industry, for a short period, it's going to kickstart the economy. Everything is going to just balloon and do extremely well, like we saw in the last bull cycle. But then after a short period, 6 to 9 months, the bubble bursts and people start taking profits. People are forced to sell their assets to be able to pay, because the interest rates are being hiked back up in order to slow down the lending, the borrowing. And then that's how liquidity is being sucked out of the industry. And then that's how we enter back into the bear market. And then the cycles repeats itself. So the one thing that causes this alone, the takeaway here is that it's unsustainable. The financial system we are facing right now is just unsustainable. It's inflationary, and it's not serving the good for the general public. So keep these things in mind as we are at this crossroad. This that we just discussed and what we discussed earlier, we are facing a brand new digital economy. It's an emerging market, and it's a market that grows the fastest, faster than any other asset class in the space. Now, this now brings us to our largest cryptocurrency. Like we said, keep this in mind, what we just discussed for the past 5 minutes, that we have an opportunity here to maximize and make the most out of this cycle. And this cycle happens every 4 years. And those who've been around know exactly how to play their hands, because as we will read in an article shortly, we'll understand what that means. So let's take it step by step. What are we looking at here? We're looking at Bitcoin. Bitcoin is currently our largest cryptocurrency in the space. It's the most adopted. It's the most recognized. And in comparison to other cryptocurrencies, I have to put it that way, in comparison to other cryptocurrencies, it is the most liquid in comparison to others. But if you compare it by itself, or by its what it's supposed to do, you realize that it has actually one of the worst liquidity to market cap ratios. Here is when we start picking sides now. If you talk to Bitcoin maxis, they'll tell you how it's all about the technology, right? If it comes to Bitcoin, they'll tell you it's about the decentralization, be your own bank. It's about immutability. It's about, holding your own keys to your wallet. It's about freedom. It's about not having centralized entities between us and all of that. They'll go on and tell you about all that. But if you sit around and really pay attention to what really triggers the market, due to Bitcoin or even Bitcoin maxis is nothing else but the price. It's the price that brings excitement, that brings the FOMO, fear of missing out, and it's the price that really gets people going and curious. And there's nothing wrong with that if you look at it just objectively. But if you look at the fundamentals, and if you want to look at something for its sustainability and efficiency, it's a wrong metric to look at. You can't judge a cryptocurrency based on its price. That doesn't tell you anything. Same thing goes for its market cap. Only because you have the largest market cap and the highest price per currency, per cryptocurrency, this doesn't say much, okay? What really counts is this right here, the liquidity. That's the bottom line. And this is really what counts. This is what makes the big difference. And this is what brings liquidity itself. And liquidity brings sustainability and efficiency. And this is the topic of today. And we've been throwing a few accusations. I'm calling them accusations because it's not proven yet. Because like I always like to say, verify, don't trust, verify. So what have we said about Bitcoin so far? Bitcoin is the largest cryptocurrency, not just by market cap, but also based on its price. It's just came out, ETFs just came out of them. It's the first of its kind, and it's been exploding. It's been doing extremely well. This is what we're looking at next. And it's even if it's based on its liquidity, it's the one that has the largest compared to the rest of the cryptocurrencies. But if you look at it as an individual cryptocurrency, you realize that it's not liquid at all. So let's stop here and identify the challenges so far that we've seen in the industry. So we are going through a new economy, and this is the digital economy. It's not going anywhere. This is the future. No doubt about it. And this is an emerging market, meaning it's brand new. We're still early in it. There's so much room for growth. And this is why it is also the fastest growing economy so far. And we are about to look at some charts that verifies that. It's been just very impressive. And with this in mind, don't you want to make the best out of it? And with this said, Bitcoin is not perfect. It has inefficiencies. It lacks certain attributes that can be improved, that can be better. And this is the whole idea. If you get into a new industry, what you need to look at is identify what are the challenges, what works great, what doesn't work, and then make sure that you make it the most efficient and sustainable as possible. And if you can achieve that, if you can add value to it like that, you'll be a market leader. Many other industry leaders have done the same thing, and you know them by now. I always talk about them. Apples and your Microsofts and your Googles, they were not the innovators. They were not the ones with the underlying technology, no. But they were the ones that always came up with the most efficient and sustainable systems, strategies, mechanisms, long-term, that long-term brought growth and value to the shareholders or the community members and for their ecosystem as a whole. So keep this in mind. If you want to succeed in any industry, make sure that you're the most efficient, the most sustainable, and in our case, we want to be the most liquid because we'll understand how important liquidity is. Let's jump into it. We've talked about liquidity. Steve, you always talk about liquidity. What's liquidity all about? Why is it so important? This is why it's important. This is why liquidity is important right here. BlackRock spot Bitcoin ETFs sees almost 800 million in daily inflows. Just to put this in perspective, this in one day alone, this was yesterday, 800 million, close to $800 million in inflows alone. Inflows is another word for liquidity. So 800 million worth of liquidity in one day alone. Now, let's go back to Bitcoin. In 15 years, Bitcoin is proudly sitting at 1.3 billion in liquidity. And we're talking about one day is 800 million. So that means in 2 days, BlackRock surpassed, actually, yes, the past 2 days, BlackRock has more liquidity has brought in more liquidity in 2 days than Bitcoin has in 15 years. So we're talking about efficiency here. We're talking about sustainability. We're talking about liquidity, which is the key driving force of any sustainable and efficient ecosystem or asset class. For an asset class to really flourish, it needs to be liquid. So this is why everybody's flocking to BlackRock, because as of now, they're the go-to place. It seems like if it comes to spot ETFs, Bitcoin spot ETFs, BlackRock is the address to go to. 800 million in inflows just in one day. Another thing I want to highlight here is one more thing before we move to the next article. Let's look at this, what it says. It's great to witness from a capital markets perspective that BlackRock has superseded and replaced Grayscale. Keep in mind, at the beginning, let's look at it. At the beginning, it was Grayscale that was actually leading the pack. And this is very impressive. Grayscale was actually taking charge. And now they're superseded by BlackRock. And BlackRock now is the main trading vehicle for Bitcoin. And why is that? Because of its liquidity. Because of this right here. It's the most traded. If you want Bitcoin, BlackRock ETFs, that's where it's all at. It's the most liquid platform. That's where everybody's flooding to. And this is why at the beginning we were talking about how these ETFs are intercepting the liquidity that would otherwise enter into the on blockchain and go to Bitcoin. So let's look at this thing even closer. If we look at these numbers right here, these are holders of Bitcoin. And within 2 months, actually not even 2 months, today is March 7th. So 4 more days, March 11th will be exactly 2 months when these ETFs started trading. So in less than 2 months, ETFs are already holding more than 4.6% of the total Bitcoin supply in less than 2 months. And we see here that the value, which represents liquidity of the ETFs combined, is sitting at close to 66 billion in liquidity in less than 2 months. These ETFs are holding close to 66 billion in liquidity. Steve, why are you always talking about liquidity? Is because liquidity matters. And in 15 years, again, Bitcoin has amassed 1.3 billion in liquidity in 15 years. And here we have Wall Street showing us the importance of liquidity. Basically, they're showing us a playbook of how to take over an asset class is by accumulate liquidity. Do that. Accumulate liquidity on a daily basis. Once you do that, you shatter all records of trading volume. With liquidity comes trading volumes. So it's only natural that they break all the records as far as trading volume. So in one day alone, and this number keeps increasing, the ETFs are trading, right now it's actually 10 billion. Right now we're at 10 billion. This is an older article. It's from February 29th. Right now it's 10 billion a day in trading volume. I always like to, let's verify. Let's not trust, let's verify. 10 billion in trading volume, right? Let's look at volume here. 10 billion. 10 billion volume, that's as much as USDC stablecoin, which is also one of the most liquid, one of the most liquid together with Tether. USDC stablecoins are the most liquid assets, cryptocurrencies in the industry. And Bitcoin, within less than 2 months, they're already achieving the same volume like a stablecoin. So if you would rank them here based on volume alone, they will be only behind Bitcoin, Ethereum, and the stablecoins. Nobody else has 10 billion in volume, in daily volume. Nobody else has, besides Bitcoin, Ethereum, and the stablecoins. So what these ETFs have achieved in less than 2 months is massive. And this is due to them accumulating daily liquidity. And with the daily liquidity increase, also the volumes keep increasing on a daily basis. We are at 10 billion now, just less than a week later. Actually, exactly 1 week later, we are at 10 billion. So this number keeps increasing with the same time as the liquidities. The more liquidity they're generating, the more their volume becomes. Okay, keep this in mind. Liquidity and volume goes hand in hand. Keep in mind the challenges that Bitcoin has is its lack of liquidity. It's not retaining liquidity. And we're going to look at some more metrics here. Let's highlight now, how do you see how liquid a project is? If you pay attention to the market cap of Bitcoin, it's at 1.3 trillion. But if you look at its volume, it's only 41 billion in volume. 42 now, it just changed. But its market cap is 1.3 trillion. Volume is only 42, right? And if you look at its liquidity, it's only 1.3 billion liquidity. So this shows you that if you don't have enough liquidity, there's a large discrepancy between your market cap and your volume. This is due to lack of liquidity. Now, let's not trust, let's verify. Let's verify with the most liquid cryptocurrency in the industry. The most liquid cryptocurrency in the industry is Tether. It's a stable coin. And another thing I wanted to highlight before I come to Tether is the price of Bitcoin. Remember how we said price of a cryptocurrency and its market cap are useless if its liquidity is not on par? And keep this in mind. Look at Bitcoin has the highest price and the highest market cap, right? But one of the worst liquidity to market cap ratios. Okay, now let's go to stablecoin. Let's go to stablecoin Tether. Now, if you want to identify how liquid an asset is, what did we say? You compare their market cap to their volume, right? You remember how Bitcoin's market cap was at 1.3 trillion, right? And its volume was only at 41 billion. Because Tether is so liquid, it's extremely liquid, its volume surpasses its market cap. That's how a liquid asset should be. Your volume will be higher than the market cap itself. That's what you call liquid. This is why we always stress on liquidity in our ecosystem. People don't understand and underestimate the importance of liquidity. And we've been in this industry for 15 years, but people still don't get it. It took BlackRock less than 2 months, and they're showing us how to run an efficient ETF. Gather liquidity. Once you gather liquidity, you gather volume. Once you gather volume, you'll start earning and generating fees, right? Simple. They didn't took them 2 months to come in and dominate Bitcoin and show us how it's run. But we've been around for 15 years and still are inefficient, still are not liquid, and still are not sustainable. So it's so refreshing to see smart money finally entering the space, finally to see Wall Street enter the space, because they see so much opportunity, so much inefficiency, and they can just come in and take whatever they want, because the crypto industry doesn't care about liquidity, sustainability, efficiency. All they want to see is this: price go up, right? As long as the price go up, everybody's happy. Price goes up, market cap goes up, everybody's happy. But nobody understands the power of liquidity, because whoever controls liquidity has the power and makes the rules. And this is why BlackRock is dominating everyone. They're the ones dominating right now, because of this. It's great to witness from capital markets perspective that BlackRock has superseded and replaced Grayscale from being the main trading vehicle for Bitcoin. And how did they do that? Now we know how. Accumulate liquidity. After you do that, you dominate the trading volume. After you do that, you amass and generate billions in revenues in volume, through the volume. Simple business model, very successful, right? But the crypto industry, after 15 years, we still don't get it. This is why we really have, we laid emphasis on educating the community, the industry, on the importance of liquidity. And let's move on further. And before we move on, let's summarize this. We just identified two things: the importance of liquidity and volume, and how, if you want to identify how liquid an asset class is, compare its market cap to its volume. That's how you see how liquid a currency is. When its volume is close to or even supersedes its market cap, that shows how liquid it is. And that's not the case with Bitcoin because it's not liquid. And we looked at how in one day alone, BlackRock alone brings in 800 million in liquidity, whereas Bitcoin in 15 years has 1.2 billion in liquidity. So in 2 days, BlackRock brings in more liquidity than BlackRock in 15 years. I mean, Bitcoin in 15 years. This is a shame. And this is just shows how inefficient our largest cryptocurrency is. And people are so blinded by the price and by the market cap and are not focusing on the fundamentals. And this is what we were discussing at the beginning. People claim they're here for the technology, right? If you're here for the technology, first of all, you would be upset that you let a centralized institution take over your liquidity and run over you and dominate you on both liquidity and trading volume and in generating distributions that you should be actually distributing to your community. So you should be ashamed letting a centralized institution come and run you over in 2 months after you've been in business for 15 years. And this doesn't look good for us, okay? And we, as an industry, should be really asking ourselves and questioning ourselves, how could we let this slip our hands? Because if we claim we are here for the technology, then we are contradicting ourselves. Why don't we focus on the strong fundamentals? If we're here for the technology, why don't we find strategies to accumulate liquidity, to be more sustainable and to be more efficient? We've been schooled publicly within less than 2 months. As an industry, this is horrible for us. But let's move on. This is a very interesting article. I'd like to skim through it. Like I said at the beginning, there's some that say we are here for the technology, right? But it doesn't make sense. If you're here for the technology and for the core values of Bitcoin, you won't be applauding when BlackRock takes over the largest asset in the industry, right? You won't let that happen. If you're here for the technology, you would make Bitcoin more efficient, more sustainable, and more liquid. And we'll look at all of this in more details. Let's move on. This article is very important, and this goes to those who are honest. They say, hey, we're here for the money. We are here for the money. We don't care about the technology. So let's look at this article. Of course, it's the meme tokens that really do well. I don't like to call them meme. I like to call them community tokens. So community tokens are the future because communities are the driving force behind any successful ecosystem. And unfortunately, and sadly to say, the community has always been let down, even though they're the largest and the most important asset within the ecosystem. However, they've been let down. Well, what do you mean they've been let down? Because the platforms that we have currently, the ecosystems within these community tokens are not built to be liquid, sustainable, and efficient. And we just saw if our largest asset class is not liquid, it's not sustainable, it's not efficient, what can we expect from smaller community tokens that just launched less than 6 months or less than a year ago? So we can't judge the smaller ones that came after Bitcoin. So if Bitcoin doesn't set the right standard and doesn't set the right like way to go about things, then everybody else that follows will just copy based on what the godfather of all cryptocurrencies is doing. But that doesn't mean that they're doing something that is right. So this is what sets us apart as an ecosystem, is we study what works, what doesn't work, and we bring changes. You have to innovate in this space. You can't just copy paste. I know it's the easiest way to go about things, but you have to really study the industry, use the technology for the benefit of the community, be innovative, bring changes about how things are happening. Let's look at this article. It's very interesting. So the whole point here is how an investor made $8 million with an investment of $250, okay, buying Pepe within an hour of its launch. So this individual bought Pepe for $251 1 hour after it launched, and they made $8 million out of it, right? So as the word spread about the success story of this individual, thousands of new investors entered, hoping to turn their lives for good, right? This is what the majority of individuals are here for. They want to turn their lives for the good, right? And we love to hear such stories that you only have to put in $250 and you get $8 million out of it. That's what we all want to hear, right? So this brought in thousands of new investors to come in and to want to experience the same thing, not knowing that this individual got in 1 hour after launch. So if we continue here, the wallets entering Pepecoin were endless, signaling the investors believe they could turn to millionaires, right, when they wake up tomorrow morning. Nonetheless, fiction and reality parted ways in the night, and when the sun was up, reality kicked in. So what was the reality? First of all, Binance and other leading cryptocurrencies listed the coin at the time when it nearly reached its all-time high, and the listings opened floodgates of users making a beeline, a long line, to purchase the meme currency, right, the community token. So now this is where it gets interesting. As new investments poured in, the older investors pulled out profits and jumped ship, and that's it. So this basically translated in simple terms is, when new investors poured in, older investors pulled out. These were the exit liquidity. They were the exit liquidity for older investors that pulled out profits and dumped on everybody else. And here we go again. So the sell-offs and profits booking have made new entrants sit with nothing but bags full of tokens heading south. Okay. So the token crashed during the weekend, and it's bleeding for the last 5 days, and it's down. It was down 60%, etc., etc. Now, and it's on the verge of gaining another zero. So will Pepe survive the onslaught, and so on and so forth? Or will a new cryptocurrency be born to repeat the cycle? Only time will tell. Now, remember to separate reality from fiction the next time around to survive in the crypto markets. Why am I highlighting this article? Because it's the reality right now in the crypto space. It's the unfortunate reality is that oftentimes those who get in early are the ones who benefit, and those who come in later are just exit liquidity to the older ones that are just waiting for that liquidity to enter so that they can exit their positions. And then that's the end of it, right? Keep in mind, this is an older article. Currently, if you look at Pepe, let's look at Pepe right now. If you look at Pepe, it's actually hitting all-time highs as we speak. It's actually hitting all-time highs as we speak. But however, it's the same thing, different day. Okay, so it's all about sustainability, and it's if you're not, you see how if you look at the liquidity is 33 million, but the market cap sits at 2.8 billion. So it's a very low liquidity to market cap ratio, extremely low. It's basically 1.2%. So the closer it is to zero, the illiquid it is. The closer it is to 100, the more liquid it gets. So that just shows you that this article, basically what this article is saying is that liquidity is not there. So they need newcomers to come in so that the older ones, new investors needs to come in so that the older ones can pull out. And this is the sad story of the majority of cryptocurrencies. And this brings us back to why we focus on liquidity. It's because to avoid this. Why should you step on somebody's head to be successful? This is not why this new cutting edge technology was brought into the space. We're supposed to use the technology to better everyone. It should be a win-win for everyone, and not just for those who got in within an hour of the launch. But those who get in even a month, a year after that should still not be the exit liquidity, but should be still participating in an ecosystem that is a win-win for them as well. So these are the type of things that we are addressing as an ecosystem, as a community. And we developed mechanisms, strategies, tokenomics to address this. Because after all, these are your friends, your families, your closed ones, your loved ones that maybe jumped in these, and they were just jumping in unawarely to be the exit liquidity. This only happens because liquidity is not retained. And this is what makes ETFs so successful. They are one-to-one backed, one-to-one. And this is what makes stablecoins the most preferred and the most traded cryptocurrencies in the space, because they're backed one-to-one. They're extremely liquid. Nobody has to panic that when a whale starts selling, all hell breaks loose and it goes to zero. So if your cryptocurrency, if your ecosystem is not retaining liquidity, this unfortunately is what happens to every single cryptocurrency that is not focusing on retaining liquidity. Because once the whales start selling, the ones that got in 1 hour after launch, then everybody else will be left holding a bag and no liquidity in there. So this is another reason why we stress so much on retaining liquidity and being scarce, not inflationary like our current monetary system is. Have a scarce commodity, or at least be deflationary. Retain liquidity, be sustainable, be efficient. We've been talking about efficiency, and we'll get to that. We'll look at some numbers. So this article, the takeaway is communities have always been supporting platforms and cryptocurrencies, but communities have been let down by these platforms because these platforms were not built to last, to be sustainable, to be efficient, and to retain liquidity so that everyone wins, not just those who got in within the first hour of the launch, but actually to go beyond that. And if you are deep enough, if you have a deep liquidity, people won't have to panic sell and head for the doors once the whales start selling, because they'll be relaxed because there is enough liquidity in there for everyone. This is why ETFs are such in high demand, because they are very liquid assets. And also, this is why stablecoins are in such demand, because they're actually very by law, they're required to be backed one-to-one as far as liquidity. So with this said, community, one more thing to highlight the importance of liquidity. If you look at the trading volume for Tether alone, it's at 96 and it's down 40%. So it was way over 160 yesterday, 166 billion actually in volume, but today it's 96 billion. So if you look at 96 billion in Tether alone, this is a stable coin. It's very liquid. Now look at Bitcoins. Bitcoin is 48 billion and Ethereum is 22 billion. If you look at the market caps, Bitcoin and Ethereum represent an amazing percentage based on market cap. However, if you just look at the volume alone, trading volume, Tether alone, a US stable coin, has more volume than Bitcoin and Ethereum combined, not even close. So again, this just highlights that the more liquid an asset is, or cryptocurrency is, the more the trading volume is. So this is another reason why we always stress on accumulating liquidity, because we understand that once you accumulate enough liquidity, look at the playbook of BlackRock, accumulate daily liquidity. Once you do this, next thing that follows, you start hitting volume records on a daily basis. Once that happens, you start generating distributions for your community. And this is exactly the same plan that we go about. This is the same blueprint, same game plan that we execute. We accumulate liquidity, okay? Just like this, daily liquidity through trading volume. How are they retaining these? These are transactions. These are people who want ETFs, right? So they bring in the volume, the inflows, the liquidity to get ETFs. And once they get this, the volume is triggered. Once the volume is triggered, distributions start being handed out, right? And same concept. We retain liquidity with the taxes, buy and sell, 6% on buy, 6% on the sell side. And 3% goes towards retaining liquidity. Transactions run economies. Without transactions, no economies can run. So this is why with every transaction, 3% is retained in liquidity. And then 1% goes towards accumulating USDC distributions, because for those who decide to stake Bullrun, they can participate in that pool. Here you see our staking contract. This is our staking contract. And actually, if you look at Etherscan and you go to holders, it's the number one wallet. The number one wallet holding close to 59% of the total supply. It's a smart contract. It's a staking contract. And this is the one that those 59% staked tokens that can participate in this USDC. You see how this contract accumulates USDC. Right now, there's a bit over 700 USDC in here. So with every trade, it's accumulating USDC. We're going to look at some numbers at the end to make more sense out of this. But the bottom line is this contract accumulates USDC and hands them out to those who are staking BRL based on the trading volume. And then, of course, we have the burning mechanism. We started with 1 million tokens in total supply. And instead of following our current monetary system that is inflationary and it's diluting our money and we are losing purchasing power due to this, and it's debt driven, our ecosystem is liquidity driven and is actually scarce. It's not only deflationary, it's scarce. What do you mean with scarce? Okay, we started with 1 million, right? And if you go to Etherscan here, you'll identify that now it's no longer 1 million in supply, it's 972,000 now. So we dropped more than 27,000 tokens are banned already. And with banning, we mean removed completely from the max total supply. So with every trade, 1% of the trade goes towards banning and removing these tokens from the total supply. In the crypto space, and even in the traditional financial market, and not even Bitcoin is like that, is scarce. Bitcoin has a low inflation rate, but nonetheless, it's inflationary. So there is no asset class right here in the industry that is scarce. Scarcity is a new form of a store of value system that nobody else has in this industry. That you have scarcity based on the market cap that we have. Nobody else is focusing on not just being scarce, but also ensuring to retain liquidity and to also incentivize those who hold the tokens and those who decide to stake and bring stability to the ecosystem. And this is what we do in our ecosystem. Now, if we go back to understand how Bitcoin compares to other asset class, let's find out how does Bitcoin compare if you compare to other asset classes. We compared it to US treasuries, which are US debts, to gold and to real estate, and also to the stock market. And based on 1 year, 2 year, 5 years, and 10 years. So it's needless to say that Bitcoin has outperformed every single asset class beyond the 2-year mark. It's outperformed treasuries, gold, real estate, and the stock market. This is why we were saying that the crypto industry is the most profitable asset class in the industry, and we've never experienced anything like it. And with this in mind, if you know this, and this chart even proves it more, if you look at companies, how long it took them to hit $1 trillion in market cap. It took Microsoft 44 years. It took Apple 42 years, Amazon 24, Google 21, but it took Bitcoin only 12 years. That's it. And keep in mind, Bitcoin is not perfect. Bitcoin has inefficiencies like we just looked at. Bitcoin is inefficient, it's illiquid, and it's unsustainable. And this is why BlackRock was able to come in and issue these ETFs, intercept all the liquidity that would otherwise come directly to Bitcoin. But because the lack of liquidity, large institutions and large investors don't want to risk being what Pepe holders just experienced. They don't want to be the exit liquidity, right? Who wants to be an exit liquidity? Nobody wants. As new investors pouring in, the older investors are pulling out. So BlackRock didn't want to expose their investors, the ETF investors, to this. This is why they created their own liquidity pool that is extremely liquid. It's a separate pool outside of this that you and me are trading, retailers are trading. They have their own pool that they themselves are trading in, and they have full control over. And they understand that the more liquid their pool is, the higher the trading volume. And how are they making money? Through trading fees, right? Management fees. They don't care about the price. They don't care about the market cap. All they care about, and that matters to them, is liquidity and volume, period. That's all that matters. And if you understand that, this is why they are market leaders. This is why there are $10 trillion asset managers. And because they understand the power of liquidity and they take advantage, they're efficient with their volume. They're very efficient. Look how efficient they are with their volume. In May alone, they generated 3.7 billion just in 1 month. That's how efficient they are with their volume. If you look at Bitcoin, now let's look at some numbers. Look at Bitcoin right now. Bitcoin is sitting at 1.3 billion in liquidity, whereas after 15 years, BlackRock can do this in 2 days. In 2 days, BlackRock will sit at 1.6 billion. So it will surpass Bitcoin's liquidity in 2 days. It's been around for 2 months only. It's been around for 2 months only, and the total ETF market cap or liquidity is already at 66 billion. So ETFs have 66 times more liquidity than Bitcoin has in less than 2 months. So what do you think BlackRock and the other asset managers are focusing on? This is a question to you, community. They are focusing on accumulating liquidity. That's all they focus on. This is why they bring down their fees. They do everything possible to attract as much liquidity as possible, because with liquidity comes volume. With volume comes the distributions. And this is the game plan. This is how you become a market leader. And this is why they're the leaders right now. They took over Grayscale. They're the go-to place to trade Bitcoin, and no longer centralized exchanges, because centralized exchanges don't have any liquidity. They don't have liquidity, and the volume is nowhere. So if they can achieve 10 billion in 2 months, less than 2 months, they'll surpass this 41 billion that we're seeing right now within half a year. By the end of the year, they'll be probably trading in the trillions. So this is why it's important, community. And the bottom line here today, like we said, the topic is, how do you become liquid, sustainable, efficient? Because these are the challenges that Bitcoin and the majority of the cryptocurrencies are facing. These are the challenges they're having. They're illiquid, they're unsustainable, they're inefficient. And this article really brought it home and brought back the reality that if you don't want to be the exit liquidity for the older investors, you need to be part of an ecosystem that is actively retaining liquidity for you, so that you don't have to be. And if it's a win-win for everyone, the better. You want to create a flywheel effect, a positive flywheel effect, meaning that as the traders are trading, they don't have to worry about this right here. They don't have to worry. As these new investors are pouring in, they don't have to worry about the old ones pulling out. Because as the new ones are coming in, the old ones are busy accumulating USDC distributions. They're not even thinking about selling because they are accumulating USDC distributions. So all of this is out of the window. This right here is not the case, because as they are coming in and generating volume, because there's no distributions for these guys, what else should they do? Of course, they have to dump on you, because the ecosystem, the community token, doesn't accumulate any liquidity. How else should they benefit? They tell you they're in the industry to make money, right? So the only way to make money with this inefficient, unsustainable, illiquid tokens is by dumping on unassuming new investors. That's the game of, that's the name of the game right now in the industry. And this is what we are tackling. These are the problems we identified in the industry, and we are addressing them. We don't want you to be dumping on new people. So this is why you create a positive flywheel effect, where it's a win-win for everyone. Like we said, the traders that are coming in, they generate volume. This volume accumulates more liquidity. More liquidity does what? Generates more volume, right? And as that happens, this same volume accumulates more USDC distributions. And this helps those who've been around already from early stages. And what they'll do is they keep staking their BRL tokens to get this USDC, because the only way to get your USDC is by staking, right? So you can get this USDC. And right now, majority, which is close to 60% of the total supply, is staked. So these individuals are not planning to unstake, because that's the only way they can receive this USDC distributions. So as these new traders are bringing in volume, their stakers are benefiting. So they're not going to dump on them. And it's a win-win for them. And because they are staking and holding the floor, the traders are benefiting too, because they're now confident and they can continue trading. As the more they're trading, the more the liquidity keeps accumulating, and then the cycle just keeps rotating. So one thing triggers the other, and before you know it, you enter into a frenzy that doesn't end in tears. And it's a win-win for everyone. And this is one of the issues that Liquidity is solving, so that new investors don't have to be sold upon by older investors. This is what staking plays a major role here, because you're incentivizing the old holders while the new ones are bringing in fresh liquidity and fresh volume and don't have to worry about being sold upon. And if you really care about the technology, you will look for projects that are customized and specifically developed to solve such issues like this. But if you're busy speculating and just want to be playing this music chair game, then you better be joining these projects within the first hour. And if you missed being in the first hour of launch, this is a pipe dream. You're not going to make the 8 million. And the majority of people are not in a project within the first hour of its launch. So that means the majority of us are right here. We are the exit liquidity for the older investors. If you're in projects that are not built to be retaining liquidity, sustainable and efficient. Let's look at some concrete numbers. We looked at BlackRock's numbers. So let's just be fair and look at Bitcoin's numbers if it had our fundamentals. If it had our fundamentals, let's look at Bitcoin's numbers and compare them to BlackRock's numbers. So right now, like we said, the volume of Bitcoin is sitting at 41 billion, right? And we want to look at the fundamentals. We want to look at how much liquidity they would be sustaining, how much burnings they will be doing, and how much USDC distributions will be going towards those who are holding the token, the BRL token, or in this case, Bitcoin, right? We know Bitcoin is a proof of work. You can't stake Bitcoin, obviously, but just for the sake of the example, we'll just play along. So with that said, let's take this number right here, 41 billion, and play with it. So let's come here and start doing some numbers. First of all, let's understand the importance of scarcity. If you have a scarce asset, it's extremely powerful. Keep in mind, Bitcoin is not scarce, Bitcoin is not deflationary, Bitcoin is inflationary. You need to understand that. But its inflation rate gets cut in half every 4 years. We need to understand that. So that means its inflation rate gets lower and lower until it hits 21 million. But by the time it hits 21 million, you and I won't be around because it will be over 100 years till then. So right now, Bitcoin as it stands, it's inflationary. Nonetheless, every 4 years, during a Bitcoin halving, you see the catalyst because the demand remains the same, but the supply is reduced, and this causes a price squeeze. It's just a matter of supply and demand. So imagine if Bitcoin was scarce, meaning they started at 21 million and the supply keeps shrinking to 20 million, 19 million, 18 million, and so on and so forth. Imagine how much more effective that would be. And instead of focusing on the price and the market cap, if you focus on liquidity, guess what? And you have this supply and demand positive feedback, the price would skyrocket as a byproduct. It will be a byproduct and not the main focus. Let's make an example. When Yahoo first came up with an idea, I like to make this example because it relates to what we are talking about. Yahoo came up with an idea when internet technology just came out. There was so much mess and chaos in the internet scene because there were so many new businesses, websites, gaming platforms, all of that, but there was no order. So Yahoo came up with the idea, why don't we create libraries and categorize them, right? And that would help individuals coming into using the internet through their personal computer. They can, for example, they're searching for games or holidays, or they're looking for certain categories, certain titles, and they want to they were aggregating all the information on the web, on the internet in one place. And as a byproduct, the search engine was developed. But that wasn't their main focus. Their main focus was just to categorize all this data and aggregate them in one place. And the search engine was just a byproduct. So you could either manually go through these categories. Maybe it was like gaming, or maybe it was whatever categories, or maybe holidays or countries, or whatever categories you want to look for. And if you didn't want to do it manually, you would just go down in the search box and look for that specific title that you're looking for, right? So when Google identified that this is actually a brilliant idea and we can monetize this, but Yahoo is not using this as their main driver, because they're busy making money through advertisement. So they were not focusing on the search engine. So this is when Google took that idea and made it actually their bread and butter. So they copied that idea of Yahoo, made it their main thing. What they changed is, instead of hiring data miners and database analysts to manually create these categories and libraries, they came up with an idea to build algorithm that we still know to this day. So they came up with algorithms that will facilitate the process of searching. And they went ahead and actually started using cookies and identifying the individuals based on their IP addresses. What are their favorite searches? What are they looking for? And they would target through advertisement. They would use those data, those informations, and customize them and target these individuals based on their searches, what they like. This is why sometimes, even if you just speak, keep in mind, when you activate or allow Google microphone to use a microphone on you, have you noticed that you can even have a conversation with your family, and then if you go to Google and you start searching something, it will suggest what you had just spoken about, because it's you turned on the microphone, it's listening to your conversation, so it understands what you are talking about. When you're about to go and search for it, it will let you know. And you'll even see, if you are talking about holidays, specific countries, it will show up right then and there. Now, what am I talking about? How does this relate to what we're talking about? It's because the main purpose of Yahoo was not a search engine. It was a byproduct. Well, Steve, how does that relate to what we're talking about? If you focus on liquidity, this is the bottom line. If you focus on liquidity, the price will be just a byproduct. It will skyrocket, because with liquidity, like we saw, volume will come. And because our volume is directly tied to these three fundamental items, burning tokens, adding even more liquidity, and incentivizing the USDC, the stakers, the price will be just a byproduct. It's not our focus, but we won't be able to help it. It will just skyrocket. So this is why we say, why do you focus on the symptom if you should be focusing on the core value that actually triggers the price and the market cap? And this is what our industry has not understood yet. And this is why BlackRock and Wall Street can just come in, and in less than 2 months, they run the show. And they intercept all the liquidity while Bitcoin is being left out in the rain. Within 2 days, BlackRock has more liquidity than Bitcoin in 15 years. So this is the bottom line. Again, I just wanted to highlight that the focus should not be price and market cap, because these are just byproducts. You should focus on the main thing, liquidity. And then as a byproduct, this now will be the byproduct that everybody's chasing after and looking for. And liquidity also will save you from tears. You won't have to be the exit liquidity for the older ones, because the older ones are incentivized to remain staked and accumulate USDC. And you want to use the technology to benefit everyone. It should be a win-win for everyone. Isn't this the purpose? Why should only the 1% benefit, like the current monetary system? Why shouldn't the 99% benefit? And this is what this ecosystem is all about. It's so that you and I can benefit from this cutting-edge technology that is the new digital class, that is an emerging market, and that is the fastest growing asset class in the space. So if you understand that, and you now know the playbook is have liquidity, bring in volume, and spread the love, okay, to the community with this incentives, okay? Simple playbook, and it works like a charm. And in the crypto space, people have not realized that and are not woken up to that yet. And this is what sets us apart. And this article said it even clearer. If your ecosystem is not doing what we are doing, unfortunately, you're living in a pipe dream. And even though you're here to be a millionaire or whatever your purpose is, and you're not focusing on technology, you better focus on technology, because these guys, Bitcoin, they claim they focus on technology, but apparently they just focus on the price going up and about their market cap. They don't care about liquidity. And let's look at it why. Let's use this number now to calculate what they would be having if they would be using our fundamentals, okay? 41 billion. Let's pull up the calculator. So let's use 41 billion. For the sake of it, let's keep it 40. Let's keep it even, 40 billion. Okay, 40 billion, let's start with 1%. 1%. So that's 400 million, okay? We're looking at 400 million. That's 1% of 40 billion is 400 million. So what does this mean? First of all, if we start with the burning, this means that 400 million, and this is in one day, okay? Keep in mind, this is within one day. So $400 million worth of BRL tokens will be burned, meaning that this supply is going to shrink drastically. It's going to drop and bring even more scarcity. And what did we see? What Bitcoin does, and everybody's looking forward to next month, is Bitcoin halving, meaning its inflation rate is cut in half. And if the demand remains the same and the supply is low, of course the price is going to go up. That's just basic supply and demand. But add in scarcity, meaning that inflation rate is not going down. Actually, the supply is going down. The total supply is shrinking. Meanwhile, the staking amount keeps going up. So this causes even a more significant shortage in supply than Bitcoin halving is doing. And it's not doing it every 4 years. It's doing it with every trade, every buy and sell. It's doing it. It's lowering the total supply. So that means 400 million worth of BRL tokens are being removed from the circulating supply. This brings a lot of scarcity. And this, combined with the staking, like we saw here, puts even more tokens out of circulation and causes an even more demand. And as a byproduct now, this is not what we're aiming for, but we can't help it. If that happens as a byproduct, the price is going to skyrocket. That's just the byproduct if you focus on burning tokens and scarcity and supply. So that's what happens with the burning. 400 million worth is being removed from the total supply. Now, let's look at distributions, because it's 1% as well. So this means that 400 million in USDC distributions will go to those who are staking. So right now we have more than $700 in USDC. So instead of the 700, now plug in 400 million. You have 400 million in USDC in 24 hours. So guess what will happen? These individuals right here, do you really think they're getting ready to unstake? if they have 400 million waiting for them for just remaining staked? So this is why we see this is not going to happen. As new investors pouring in, the older investors are pulling out their profits. So if you have 400 million in USDC, do you really think the old investors will cash out if they had our tokenomics, our fundamentals, and our staking platform? They're not going anywhere. Who is going anywhere? Because even if some of them leave, the remaining ones, we are the ones benefiting from this. And this is in one day, 400 million, just for holding, that's it. So we're incentivizing the holders. And even when new people come, they don't have to worry about being sold upon, because the older ones are busy accumulating. So that's 1% for burning, 1% for distributions. It's a win-win for the new ones and for the old ones, because the old ones are busy accumulating while the new ones are busy trading. It's a win-win for everyone. Now let's look at, we looked at 1 day, right? So let's look at for 1 month. So to do this, we have to multiply by 30, right? So this means that 1, 2, 3, 12 billion. So in 1 month, $12 billion worth of BRL tokens would be removed from, not from circulating supply, but from total supply. And this will cause a high demand. Demand remaining the same, this will cause an amazing price squeeze. So imagine halving an inflationary token causes a price squeeze. So what about banning and removing from total supply 12 billion worth within a month? What would that do to the price? I will let you answer that question for yourself, because we're not focusing on price. Price and market cap are just byproduct. We focus on liquidity because we understand, like BlackRock has been proving us, the importance of retaining liquidity brings volume with it, and the community benefits from it through the revenues. I mean, through the incentives that it generates, right? So back to this, 12 billion in burning tokens. And this 12 billion is the same for the USDC distributions. This is mind-boggling. This is why we say how inefficient Bitcoin is right now. They're wasting the volume. And BlackRock is busy accumulating all of this, using the volume for accumulating all these distributions for themselves and whoever their shareholders is. And this is what community is missing out on based on this trading volume community. So let's continue. Imagine if you're a staker and you know you'll be accumulating 12 billion in USDC for the 58% for these individuals right here. You have 12 billion in 1 month just for you, just for remaining staked. You have to do nothing else. Just remain staked, and then within a month you share 12 billion amongst yourselves based on Bitcoin's volume. Meanwhile, as you remain staked, what you're staking becomes even larger because the supply of the token you're staking keeps shrinking. There is not an asset class like it out there. There's nothing like it out there. So with that said, let's move on to the main point, liquidity. This is where it really gets interesting. Liquidity is 3%, right? So let's look at liquidity. To do this, let's go back to the 1%. 1% was 400 million, right? So 1%, that we need to do this 3%. So we multiply by 3. So as far as liquidity, based on Bitcoin's volume of 40 billion, within 1 day, we would be accumulating 1.2 billion in liquidity. Do you see how inefficient Bitcoin is? This is the same they have right now in 15 years, 1.2 billion. So Bitcoin managed to accumulate 1.2 billion in liquidity in 15 years. And just in one day alone, based on today's volume, within 24 hours, they would have the same amount they accumulated in 15 years. They will have, right now, they will double up their liquidity in one day, based if they had our fundamentals, our tokenomics. How inefficient Bitcoin is, this is the topic of today. So let's be fair. This is just, we just calculated one day, okay? And this liquidity, this, if you compare this with BlackRock, it will surpass BlackRock's daily inflow. Our daily inflow would be what? 1.2 billion. So if Bitcoin had our fundamentals, that would surpass that of BlackRock right now. In one day, BlackRock is 800 million inflow. Bitcoin would be pulling in 1.2 billion inflow. But right now they're not, because they're not that efficient. So let's go further now. This is one day. Let's do 30 days then. We're looking at 36 billion now. Let's look at Bitcoin. Bitcoin is sitting at 1.2 billion, right? So this means within a month, Bitcoin would have 36 times more liquidity than it has within a month, if it retained this volume. This is inefficient. This is very inefficient. And this 36, this is in 1 month, right? 36 billion in 1 month, right? So let's multiply by 2 and do a comparison. You might ask, Steve, why are you multiplying by 2? Because we saw here that you see here, within 2 months, the ETFs amassed 65 billion, almost 66 billion in liquidity, right? In 2 months. So this is why we multiplied by 2. So we saw that within 2 months, Bitcoin would have amassed 72 in liquidity, 72 billion in liquidity. So even in this metric, Bitcoin would still surpass ETFs. Are you getting to where we are heading right now? The bottom line is ETFs would be irrelevant. Nobody will be rushing to buy ETFs because Bitcoin would be way too liquid, more liquid than the ETFs market. But because Bitcoin was not developed to retain liquidity, it is more inferior. People rather get the copy or the fake version of Bitcoin because it's more liquid than the original. How pathetic is this? How sad is this? And this is what the crypto space doesn't understand. And this is why BlackRock and the comrades can hijack within 2 months. They can take over the crypto space and take over Bitcoin because it's not focusing on liquidity. This won't happen to us because we are focusing on liquidity. So keep in mind, everything within 2 months, Bitcoin, using our technology, our ecosystem, our tokenomics, they would surpass BlackRock. They would surpass BlackRock's 65 or 66 billion in liquidity in 2 months. They would surpass it. And these ETFs would be irrelevant because people would rather go and get the original than getting a certificate of something, of the original. Why don't you go and get the original? But because it's illiquid, people rather go get the copy. But because it's liquid, it's more secure. Liquidity brings security and stability. And this is what Bitcoin is lacking. It's not liquid. It's not. So let's move further and look at it we looked at for 2 months, right? So let's continue and look for the rest of the year. So we have to multiply this by 6 now to get a full year. So we're looking at 432 billion. This is liquidity. Keep in mind, this is liquidity. 432 billion in liquidity. Now, to put it in perspective, I really want you to understand, this is not market cap. This is liquidity. Right now, Bitcoin is sitting at 1 billion, basically. 1 billion in market cap. I mean, in liquidity, just 1 billion. If it was maintaining this volume for a full year, using our ecosystem's tokenomics, it would have accumulated 432 billion. So 432 times more liquidity than what it has now. 430 times more liquidity within 1 year. With that type of liquidity, the volume would be closer to 1 trillion every day. And this will make Bitcoin the most successful currency in the history of mankind. However, this crown will go to ETFs single-handedly. ETFs, Bitcoin spot ETFs, will be the most traded asset class in the world because they do the right thing. They focus on retaining liquidity. They do something that Bitcoin was not programmed, was not coded to do. This is why being the first is not always the best. Coming later is better because now you can look at the pros and cons, what works, what doesn't work, and then you make things more efficient. Here we are again. We're not here we didn't invent blockchain. We don't have to. But we can study the industry, look at the existing cryptocurrencies, look at the current staking platforms, identify the challenges, and then look at those challenges as opportunities, and then address those opportunities by developing a platform that addresses all those challenges that we discussed today: illiquidity, unsustainability, inefficiency. And if you don't address those things, it will end up in tears for you. And the only winners are those that got in within the first hour of the launch. And everybody coming up after them is just exit liquidity for the older ones. That's not the case for our platform. And this is not what the blockchain technology was all about. You don't have to step on somebody's head to succeed. We can live together. The traders can live side by side with the holders and the stakers, while both of them are contributing towards retaining even more liquidity. And that liquidity will bring us even more volume. And that volume is going to generate for us incentives in the form of USDC. And this goes towards those that are staking so that they don't have to cash out by selling on the new ones and looking for exit liquidity. That's not the case for us. And these are the issues and the challenges in the industry right now. And we are addressing it. Our ecosystem is addressing it. And we do so much more. As you see here, we have 4 pillars that we focus on. And those 4 pillars of solutions are, one of them is liquidity. Of course, we have education, we have security, and social network. So these are a whole different topic again that we'll add next time in the next community event. Today, we're just highlighting liquidity because it plays a major role. And the industry as a whole needs to understand its importance. And I hope today it shed light on how important it is. And whoever runs and controls the liquidity has the power and controls the asset. So Bitcoin is not controlled by the community anymore. It's controlled by BlackRock and their 9 other comrades, because they're the ones running the liquidity. They're the ones who's having all the liquidity, all the volume, and all the revenues they're generating. it's out of the hands of the crypto community. So they can talk about believing in the token, in the technology all day long, but obviously what they focus on is the price going up and the market cap. They don't believe in the fundamentals, because if you believe in the fundamentals, learn from the best, learn from the market leaders. The market leaders, BlackRock is not a mistake that they are leading the market. They have a game plan, and it's simple. And it's a game plan we've been preaching for over a year now. And it's hard for people to grasp it. But BlackRock came in, used it, same game plan, accumulate liquidity, get volume, get your incentives, repeat, rinse and repeat, and you'll become the market leader. That's the simplest game plan ever. When we launched this project, this is the game plan we came up with. And we've been educated for over a year now. We've been educating on this concept. And this is why it's so refreshing to see smart money coming in now, Wall Street coming in, doing the same thing we've been preaching about for over a year. And within 2 months, they take fully control of the largest cryptocurrency in the industry. This just shows you how the difference between smart money and speculating money. So that's the difference. So once people really wake up to what we have here and how efficient, how liquid, how sustainable our ecosystem is, we made a comparison. If Bitcoin would be using our tokenomics, our strategies, our mechanisms in place, ETFs would be relevant because they would be outperforming them on liquidity, on volume, on market cap, on every aspect. But it took BlackRock less than 2 months to take over Bitcoin, the original. So this is what's facing Ethereum next. And then who knows, maybe Chainlink, maybe Solana, maybe Cardano. And the whole idea of ETFs is to serve as a liquidity aggregator. ETFs are a fancy word to say we aggregate liquidity. We are the hub for liquidity. We accumulate, retain liquidity. That's what ETFs is about. This is why Larry Fink, the CEO of BlackRock, always talks about tokenizing everything, ETFing everything, because he understands the game plan. The moment you ETF something, meaning you gain liquidity from that asset class, you control that asset class, period. So the reason why they want to tokenize everything is not because they believe in the spirit of blockchain, that giving everybody financial freedom, being decentralized, be your own bank. That's not why they want it, because they want to do the same thing they did with silver, gold, Bitcoin now, and run the liquidity, because they don't care about the price. They care about transactions. And they have the transactions because they have the liquidity. So as long as they're making billions, 3.4 billion in 1 month in revenue, why would they bother about the price? They don't care about Bitcoin. They care about profits. And they're destroying what was actually built for us, for the 99%. And this is why our ecosystem stands out, because we believe in the core values of the blockchain technology, and we customized it in a way that everybody wins, like we just said. The stakers win, the traders win, the platform accumulates liquidity so that there are no tears here on our platform. Community, let's be informed, let's be educated, let's be inspired. Let's know what's going on in the industry. Let's understand the power of liquidity, the power of efficiency and sustainability. We showcased this today by applying our tokenomics to Bitcoin, just to give you an idea of how much more Bitcoin, how much more efficient Bitcoin can be, and would have avoided being experiencing a hostile takeover by BlackRock and their comrades within less than 2 months. So the more people understand what we're doing, we're in the space to do, the better for us. So this is why it's very important for us to really understand the added value we bring into this space, the importance of sustainability, efficiency, and retention of liquidity. It's a win-win for all of us. And like I said, ETFs are here to aggregate liquidity. And that means they want to go step by step to every single cryptocurrency. They want to do the same thing in the real estate, in the stock market. They want to capture all the liquidity, and they'll be generating a lot of fees, a lot of revenues for themselves. Because with liquidity comes volume, with volume comes revenue. Simple concept, old concept. And this is the concept that cryptocurrency has not understood yet. The power and importance of liquidity. Because once you have that, you control your asset. And no central entity will come and control and dominate you. And remain decentralized. Don't be listed, don't go out to the centralized exchanges. Remain decentralized, because this is where the people are, you and me, the 99%. They're hungry to learn how to have their own wallets, how to be their own banks. They want true decentralizations. They don't want institutions in between. And if you really believe in that, those morals, those mythos, those fundamentals, you will not be happy for ETFs, because ETFs mean you have central institutions in between you, and you don't even hold the real deal. You're holding a paper, a certificate of the original. If that's what you want, that's your choice, of course. But with us, we want to encourage, inform, educate, and inspire those that really believe in true decentralization, in being their own bank, in not a debt-driven community. I mean, not in a debt-driven monetary system, but in a new digital economy where it's liquidity-driven and it's scarce. Same thing applies to our survivor token, of course, as well. It has the same tokenomics as far as 100% of the token supply has been placed in the liquidity pool. So the only thing it knows to do is be deflationary. With every trade, 1% is being banned, and this ban wallet is blacklisted, meaning these tokens will never see the daylight again. And the beautiful thing is, if you go to holders, the first wallet behind the liquidity wallet is the ban wallet. So over 6% of survivor tokens, the survivor supply, has been banned already. This is the largest wallet after liquidity pool, is the ban wallet. And same thing with Killer Whale. If you look at its wallet, its ban wallet, currently it's sitting at the 5th place right now, at almost 3.9% is banned. So it doesn't take much, and it will take the top spot, just like Survivor did. And its top spot wallet right after the liquidity pool would be the ban wallet. And this is what you want to see. You want to see that the largest wallet is the ban wallet, and you want to be part of a ecosystem that has deflationary supply, or it's scarce. And another beautiful aspect is the contracts has been renounced here. Liquidity have been locked for 100 years. There were not team token, team supplies, or pre-sale or whitelisting, none of that. So these are the type of projects that are fully community driven, and during this bull cycle that we're about to experience are the ones with great narratives. Why is it such a great project? Because it's the first of its kind. There is no other cryptocurrency out there dedicated to the women, to the queens in the space right now, where they can gather, where they can exchange their experiences, where they can learn about the blockchain technology on a daily basis, share their experiences in the real world as well. This is a platform for that. And this is what makes this project so unique. There is no other cryptocurrency on the Ethereum blockchain dedicated to the queens, to the women out here. There is none. It's the original. But there are a bunch of frog, dogs, cats tokens out there you can pick from, 10,000s of them. But there's only one dedicated token, which is the survivor token that is dedicated to the women, that has a higher purpose and has a great narrative. That's the importance of it, besides the fundamentals, the strong tokenomics and the supply fundamentals. Same thing for Killer Whale. It's the only token dedicated on the Ethereum blockchain to the whales of the industry. Has the same tokenomics as well, with the 1% going to bonds. No liquidity, liquidity locked for 100 years. And 100% of the Killer Whale tokens are in the liquidity pool. And like we saw here, number 5 wallet, this is the Barn wallet right now, ending with 723. This is the Barn wallet. It's on 5th place right now, still climbing its way up. So at least your token needs to be deflationary, and preferably it should be scarce. So Bullrun takes it to the next level and is actually scarce. It has a scarce supply. That combined with the staking mechanism causes a lot of supply shock, and that translates, like we see here with Bitcoin halving, translates in price to skyrocket, because each time the demand remains the same, but the supply is cut in half. This causes a price squeeze. So picture the supply not being cut in half, but actually it's being reduced from the total supply. So it has a much stronger effect on it. And something that I want to show you here, let me close with this. To just highlight the importance of tying your transactions directly to your burning mechanism. Ethereum shows it here beautifully. Ethereum, within the last 7 days, has burned close to 33,000 Ethereum, because it's tying its transactions to its burning mechanism. This is why you see Ethereum is deflationary. It's issuing 910,000 tokens a year. However, it's burning 2,600. And if you do the math, that's close to exactly 3 times. So it's burning 3 times more than it's issuing. And this is only possible because they're tying the transaction volume directly. You see the volume here. They're tying this directly to the burning mechanism. Does this sound familiar? And this is why you see Ethereum just outperforming Bitcoin. Within a week, it's 14% up. And this is why you see that happening, and you'll see that happening in the long term as well. So Bitcoin reduces its inflation rate every 4 years in half. Ethereum does this with every transaction. Every time there's a buy and a sell, the supply shrinks. That's the same concept we have here. With every buy and sell, not only does the supply shrink, it's removed from the total supply altogether. Liquidity is being retained, and USDC distributions are being accumulated, just like we calculated here. And we saw some massive numbers. This is how we're going to close, community. This session was just to highlight the importance of liquidity, sustainability, and efficiency. And these 3 items are lacking in this industry. And if you want to be an industry leader, find issues, find challenges, find problems, bring up solutions for these problems. Be more efficient, more liquid, more sustainable. And this is how you become a market leader. It didn't take BlackRock more than 2 months, and they're the market leaders. They're the place to go if you want to trade Bitcoin, and not Binance or Coinbase or crypto.com. All these centralized exchanges are about to go. Not Coinbase. They're the choice place, but every other centralized exchange is about to go belly up. They go out of business because they will run out of liquidity. They don't have enough liquidity, especially institutions and big whales. How will they cash out? Those billionaires on paper, how will they cash out? Those 100 millionaires, how will they cash out? They'll be forced to go over here. and buy ETFs or sell their Bitcoin directly to Coinbase or to BlackRock so that they can get their liquidity out. And this is exactly what's getting ready to happen. There'll be a big migration going over to ETFs, and there won't be centralized trading anymore. So everything will go through ETFs because it's the most liquid place. So when you understand that, you understand the power of liquidity. So we can do the same thing and keeping it decentralized. We can be the hub. We can be the ETFs for DeFi and be the hub where we accumulate all the liquidity. And it's a win-win for everyone. Community, this is it for today. And that's the message for today. I hope this was informational to you. I don't want to overextend it. I want to keep the message crisp and to the point. Bear with me as I'm rearranging the screen here so that we can tackle today's Twitter challenge. I hope this message today was informational, educational, and inspirational to you all. I hope you were able to take away something from it. These are just fundamentals. These are just fundamentals. And these fundamentals are very important to understand because they're the ones who really take us to the next level. With that said, let me come back to you, community, and check on you. See if you have any follow-up questions, any feedbacks. Meanwhile, let's keep our eyes peeled as the tweets are about to come out and we can participate in actually the first one is out already. You have the survivor is out, I see. Beautiful. The survivor is already out. So let's ensure that we engage with these. Why is it important that we engage with these? We bring awareness, community. We have everything going for us. Keep in mind, this industry is the new digital market. And it is an emerging market, and it's the fastest growing market. It has the greatest potential, especially when there's liquidity in the space. And the Feds are about to do their thing. They will raise the debt ceiling and start printing money. So much that it will cause massive inflation. And that will be the beginning of the bear market all over again because they'll start cutting everything. The beautiful thing is once you have accumulated enough liquidity and you keep it within your own ecosystem, we won't have to worry about these cycles anymore. And with our distributions, as you saw, based on Bitcoin's 40 billion in volume, how about issuing 400 million on a daily basis to the community? Why would we have to wait 4 years for the Feds to issue liquidity for the Bullrun to kickstart? If we as a community, based on Bitcoin's 40 billion volume, have 400 million in one day on a daily basis that we flood into the community and give out as USDC distributions. So you think about that, community. And we saw the article with Pepe that if you don't have the community always delivers. The communities are always delivering, but it's the platforms. It's these cryptocurrencies, these community tokens. They're not built to last beyond a hype or beyond a bull market. One thing I want to show you, I saw that I didn't show you that. Let me show you this one thing. Let me share my screen with you. Please pay attention to the tweets. Let's engage with them as we still talk here. There's one thing that is important that I want to show you. Let's do the example with Bitcoin. One thing you have to understand, after every bull cycle, there is a bear market. Keep that in mind. We just came out of one, right? And now look at the last bull cycle. Now we're even above. Look at this. And we're just at the beginning. This will be the most massive bull run ever experienced in the history. Because we already in the same highs like we were in 2021 at its peak. We're not at the peak yet. The peak will hit next year between October and November. So, and we're already here. So that means we'll actually double. There's a possibility of even doubling or tripling from where we are right now. What does this mean? This means there's a lot of liquidity about to enter. But the point I was trying to make is after every bull run, like everything is going up now, it will come right back crashing between 85 to 99%. Why am I highlighting that? This is why it's important that as you're going up, you need to be retaining exactly what we discussed. You need to be banning tokens. You need to be retaining liquidity. You need to be incentivizing your holders so that when the time comes and the music stops and the party is over and everything comes crashing down because the whales start selling, and like we saw on the article here, tears start being shed because the new investors now that are pouring in are the exit liquidity for others. This is the reason why you need to be accumulating. You need to be part of an ecosystem that does that for you. It accumulates liquidity, it burns tokens, and it retains the USDC distribution so that when this time here comes, nobody will have to unstake and sell because they're busy accumulating hundreds of millions in USDC. The token has burned so much supply that its price flow has been risen, and the liquidity is so deep that the traders just keep trading nonstop. Why would you stop trading if the liquidity is so deep, the USDC distributions are still high, and the token that you're staking keeps decreasing in total supply? There's nothing like it out there. So and we are paired with USDC too. So all this has been addressed as well. Okay. So while the market crashes 85 to 100 to 99%, we're just getting warmed up, and we still have our liquidity, and people can still trade, and the music won't have to stop because there's enough liquidity, and the whales are busy accumulating USDC and not thinking about selling on those who are entering the market or decide to trade. So that's just another reminder that what goes up must come down. If you don't have strong fundamentals, that will be your downfall, because as it goes up, it will come back down. And if you have not sustained, bond, retained liquidity into USDC distributions to retain, to sustain or incentivize the old holders, what else should they do? Of course, they'll unstake and start selling. But if you give them incentives and you develop a ecosystem that is sustainable, liquid, and efficient. By the way, community, the Bullrun is out as well. Bullrun is out as well. This is great. Yeah, let me go through your comments here. I see here Queen Wiles talking about, meanwhile, let's all hit the like button. Exactly. Let's do that as it helps to spread the word. Let's get these people, bring more people, bring awareness, and let them get this information that we sharing as a community. Queen Resogo says, greetings, kings and queens. Greetings back to you as well. Nice having you in the community. And my brother Franklin says, good evening, BRL family, and well done, our guru and brother Steve. It's a pleasure, brother Franklin, having you here. It's a pleasure. Thank you for gracing us with your presence. We have Queen Margaret here as well. Greetings to you, community. Hello, my brother Steve. I'm looking forward to this amazing opportunity to learn. We are happy having you here as well. Thank you so much for participating today. My great uncle George, always a pleasure seeing you, uncle. Hi family, excited to listen to Steve's topic today. Big up for beautiful banners let's react to them and share. Absolutely. Very well said. That's the least we can do to show our appreciation for the time these individuals are taking to be creative, to develop these beautiful banners with great messages. So that's the least how we can show them our gratitude and our appreciation, is to really react to them and share them. That's the best thing we can do. Well said, Uncle. We have hello family. Greetings to you also, Queen Bisha. A pleasure having you here as well. And we have here another. We are so lucky to be part of this community of kings and queens. I'm humbled. We are humbled having you here as well. It's a pleasure having you here. Great brother Theo says, please be sure to hit the like button. Absolutely. Let's always be engaged with these, as this is how we spread the word. This is how we bring awareness to our ecosystem and also to the industry, because it's all about the industry as well. We need to really find ways how we can add value to this industry, because the technology is here. We are not here to say we're here to make, some people are just saying we want to see the price go up. That's all we want to see. So they miss out on the fundamentals, because you're focusing on the wrong thing. But if you would focus on the fundamentals, it will automatically lead to what you actually want, and that's where people miss it in the industry. Like, if you really want what you say you want, then you need to look for fundamentals, for strong tokenomics, sustainability, efficiency, liquidity. That's what you need to look for, if really that's what you want. And look for long term. Don't look for quick plays. Look for long terms, because boom and bust cycles are cyclical. But if you want something for the long term, you need to be part of something that is built for the long term, beyond the hype, beyond the bull cycles. That's very important. We have here, man, I love when my great brother pulls out the calculator. Oh man, that's a good one. I'm enjoying it. I'm really enjoying it, just to bring awareness of the importance of what, the potential that and the inefficiency that we see in the space, and the potential of our ecosystem. It's important to do that. Queen Lati says here, happy to find the live stream still on. Thank you, community. This project is one of the best projects, and to understand its magnitude, you have to follow all the teachings that we are being given. Very well said. Absolutely. Knowledge is power. People perish because lack of it. So it means power. So if you perish because of lack of it, so what is if you have some? That means you'll flourish, you'll succeed. And this is what we aim. We just want to be here to inform, educate, and inspire the community, the crypto industry, and just to bring awareness to what added value that we bring, and how important it is for us to develop something that benefits everyone. It should be a win-win for everyone. Great brother Demo says, if you are not able to compete, you will get run over. Well said. Those are facts. Those are facts. If you're not innovative, you'll be left in the dust. And ask Kodak, ask Nokia, ask Yahoo. This history has been repeating itself. If you're not innovative, and if you don't add value to the community, to the using the technology to its fullest potential, to be liquid, efficient, and sustainable, you'll be left in the dust. And we've seen the game plan of BlackRock and their comrades. It's simple, very simple. Accumulate liquidity, run with volume, get the revenues, rinse, repeat, and dominate the market. It didn't take them more than 2 months, and they're running the show, dancing on Bitcoin maxis. So that's horrible. Like we see here, Survivor is out already. Killer Whale is out already. And we have Bullrun also out. So all of them are out, community. Let's engage with these. It's very, very important. And we need to really pay attention to these. Let's engage with them. The first minutes are very important. As we discussed, the algorithms of Google are in full effect because Google owns YouTube. So they're using the same algorithms. Let's engage with these. Let's be effective. And that's what we need to do. Like we said here, we have my great brother Glenn here. Always a pleasure seeing you, my brother. He says great information about what's going on in the market. What's going on in the market and what's changing and what to look for when investing. Thank you, Steve, for always keeping us educated about this crypto space. Well said, my brother. And that's what we're all about. That's what our ecosystem is all about. And it took us 2 hours just to talk about the basic fundamentals. We haven't even touched about the education part, the security part, and the social network, which is a global decentralized community. So there's so much more to this ecosystem. It's so complex, but yet so simple. And this is something that we always find topics to discuss because it's such a complex ecosystem that addresses real world challenges and has solutions for them that are proven. We've been through a bear market and we came out with battle scars, but yet victorious. We came out with great numbers, and now we're entering the easy road, the easy street known as the bull cycle. And everybody can succeed during this cycle because all rising tides raise all boats. That's just what happens. And if your boat is using the latest technology to be able to sustain liquidity, be sustainable, and be efficient, will come out on top. And the more people understand how the industry works, what it does, how other cryptocurrencies are doing their thing, how other staking platforms are operating, and then you zoom into our ecosystem, you'll appreciate it because we do things completely different, especially how our monetary system works. It's debt-driven and inflation-driven. Our tokenomics and ecosystem is liquidity-driven and scarcity-driven. It's just we do the opposite. We don't go on the roads that have already been followed. We make our own roads and we follow our own ways and we do things differently. If you're not innovative, like my brother Demo said here, you'll be left in the dust. And you can ask Kodak, you can ask Nokia, you can ask Xerox, and you can ask Gary, how Bill Gates ran him over. So this is how you need to think about things. Be innovative, be productive, be efficient. And this is how we're going to close today, family. Queen Val here says, family, let's all remember to comment and like on the video after the live stream. You are all the best. That's a great way to summarize this live stream. I want to thank you all very, very much for all your contributions. For those that made it out here on this beautiful Thursday, you took your time to be part of this live stream. Thank you very much for all of you for participating. You're all very much appreciated for all the efforts you put in. Thank you for your consistency. And we hope, and our aim is always for you to be informed, educated, and inspired, and to be empowered and to understand that we have something beautiful, something unique, something that is customized based on the current markets, the challenges, and also that benefits every single one of us. We win together. This is not about being early within the first hour, and if you're not, you lose. No. This is about no matter what time you come in, you're a winner. And it's built in a way that it benefits the common people, like all of us, the 99%. Well, that's what it's meant to be for. With that said, community, I want to wish everybody a wonderful rest of their week. Looking forward to such a another successful weekly event. This is amazing. It's been really powerful. It's been great. This is a record. Please help me do the research. But I think we definitely one of the tops that did 52 days consecutively, being active on Twitter on a consistent basis. Imagine us being 50, 100, 1,000, 10,000 people doing this on a daily basis. We'll be trending every single day. I see hashtags trending for less than 3,000 posts. So you imagine a community of 10,000 people doing this on a daily basis, and we have 10,000 posts with hashtag survivor, hashtag killer whale, hashtag bullrun. Community, let's grow. And we'll be trending on a daily basis. And that's the whole idea. On a grand scale, we'll have a great community of informed, educated, and inspired individuals that we use our skills and talents and reach to develop and enhance and bring awareness to the crypto industry and our ecosystem as a whole. And we'll be able to acquire and sustain the deepest liquidity in the space. With that comes the highest trading volume in the space. And with trading volume, we'll be burning a ton of tokens. We'll be accumulating even more liquidity. And the best part is we'll be able to give back to the community through USDC distributions. And that's the whole idea, is a win-win for everyone. It's high time that there's a platform out here that is for us, for the people, literally for everyone. And this is what we're all about, community. With that said, much love to all of you. Regards to you and yours. Stay healthy, stay positive. The great days are ahead of us still. The hardest part are behind us. Thank you for participating and engaging in today's another community event and another Twitter challenge. Tomorrow we're looking for day 53. We are closely inching little by little to the 90-day, and congratulations to all of you. With that said, I want to wish you all a wonderful rest of your day. I see here the Queen herself has written here, thank you, Steve, for such an amazing session. Also want to thank the community for attending this session and for your support to the community. Absolutely. Very well said. And I believe these are great words to close on. Nothing else to add after this. It's everything has been said with these words. Thank you very much, Mother Queen, for your presence, your wisdom, for your encouragement, for the platform, for your uplifting spirit. And we all appreciate you very, very much. So the community, I wish you all a wonderful rest of your day. Have a wonderful rest of your Thursday, wonderful rest of your week. And looking forward for tomorrow, day 53 of our Twitter challenge, and looking forward on Saturday for another beautiful community event with you. Bring your questions, bring your feedbacks, or let's just have a dialogue as we always do. With that said, happy Thursday, happy rest of your week, and see you soon, community. Bye-bye, everyone.